Hey everybody, JC Peretz here, founder of AllStarCharts.com. And once again, I'm joined by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
What's happening, JC?
Putting on options trades. Nice little Wednesday. We've been talking quite a bit over the last couple of days, looking for a nice opportunity. And this Marathon Petroleum, I think looks good. Comes from the Follow the Flow report. Does that make you excited?
Hey man, anything that services good ideas makes me excited. If it happens to be the Follow the Flow report, then hey, that's exciting.
Sean's like, I don't care if it comes from the Young Aristocrats, a 2 to 100 club, the minor leaguers. I don't give a damn. Just give me the trade, JC. I love it. This one comes from the Follow the Flow. So specifically, it's funny because we're putting on an options trade. It comes from data we get from the options market where we're looking for very aggressive directional bets in the options market that, we do our best to find ones that aren't being hedged, at least that we can see. And we just build a universe. That's really all it is. Somebody's paying attention to this one, so I kind of want to take a look. And usually we find, rarely do we not find the name. We have one name in particular that we like here, and that is Marathon Petroleum. And you like it too, huh?
Right. So the Follow the Flow report uncovered that there was some unusual options activity happening in the April 65 calls. Saw a lot of volume coming in on the offer. Someone's getting aggressive here. Do we know why they're being aggressive? No, we can't know that. We do have an earnings.
They think it goes higher, Sean. I think that's why.
You would think, yeah. We do have an earnings event coming up on February 2nd, so maybe somebody's got some advanced knowledge that that's going to be a good report. We don't know, but the fact that it shows up on our report and surfaced while we were going through those analytics, hey, it led us to look at the chart, and we're looking at that chart, and we like what we see there, don't we, JC?
Listen, I was taught to buy smiley faces. You want to sell the frowny faces, buy the smiley face. Got a big base here, big bottom. This goes back to 2019. You got a very clean target back up there towards 88 upon that breakout. But at the very least, just getting back to that 69, 80, 70 level before it really gets going. And if oil's right around 76 today, yep, right at 76 and a half. If oil can hold above that 76 level, I think that's encouraging for this name. So maybe it's not so much that they're coming out with a great earnings report. Maybe somebody knows something about energy and they're using this as a vehicle, right?
Yeah, perhaps. And, we like the setup here. But one thing, when we were kind of talking through the trade yesterday, you and I, one of the things that I was thinking here was that, yeah, this could make a run at 88, but it's probably not going to just take off from here. It's going to have to chew through some of that upper resistance there where that red arrow closest to the right there is pointing at right around the 70-ish level. And so my thinking here was, well, I don't want to buy just straight calls. I mean, I know the volatility is cheap here, relatively cheap right now, but I didn't want to buy straight calls because with that pending earnings event coming up in about a month from now, it's very possible that this stock could just kind of sit in a holding pattern for a little while. And if we're holding long calls, that's not going to be a very favorable position to be in. The value of those calls is just going to steadily erode. So we wanted to figure out a way to perhaps get paid while we wait. And we also wanted to figure out a way to maybe benefit from a likely rise in volatility that will probably happen as we approach earnings. That's normal. That's natural. The options market is where people go to hedge their risks heading into an earnings event. And so when that happens, the premiums in options tend to go up in value heading into the event. So if we could position ourselves to be bullish, to take our time to get there, and benefit from any increased volatility heading into an earnings event, the call calendar spread made the most sense to me. And so you got the P&L graph up here on the chart. What we did is we ended up buying a April 70, February 70 call calendar spread. So what that means is we're short the February 70 calls and we're long the April 70 calls. And we paid about $1.10. I think you could pay, it might be a little bit more now, but we paid about $1.10 for it. And the bet here is, the stock's going to go higher. It might take its time and we'll benefit if it does.
An object in motion tends to stay in motion, Sean, and I think that that's what these people are betting on. Clearly, they're making very aggressive bets, and it's an uptrend. So the higher probability outcome is an upside resolution. A downside resolution would be less probable. Can happen. Anything can happen. But the higher probability outcome is higher prices. So I like this. So once again, we're long the April 70 calls, short the February 70 calls. Marathon Petroleum MPC call calendar spread. Put it on if you like it. Shoot us a note. info@allstarcharts.com. Have any questions, any comments, any ideas of your own? We like to hear it, right, Sean? We have a smart audience.
We do like to hear it, but hey, I'd be remiss if we didn't go through, how we plan on managing this trade going forward.
Great point. Great point. So let's say we're wrong. Why don't we start there? What if we're wrong?
If we're wrong, I'm watching the 60 level. So if Marathon can't hold this $60 per share level, if we get a close below 60, that is my signal that we're early or we're wrong. Either way, I don't care. I want out, and I will close the trade down for whatever I can get for it. So that's the first thing. But now let's talk about the ways we can win. We can win in a couple of ways. So if MPC does start moving the way we want it to move, and it moves quicker than we think it will move, why don't you bring up that other chart, JC, the P&L graph, so that it'll give a better picture. There you go. So if we trade up to 70 before February expiration, before those February short calls expire, then we will want to take the trade off right there, as close to 70 as we can. If it gets to 70 or above, we are going to exit the trade. It will very likely be a profit at that point. How much of a profit depends on when it happens. Okay, the closer to February expiration that we are, the more value this spread will have, because you can see in that graph there's two colored lines there, right? There's the blue line and the purple line. The blue line is the value of the spread at February expiration. The purple line is the value of the spread across a range of prices today. Now, as we get closer to February expiration, that purple line will start rising and start morphing into that triangle shaped blue line that you see there. So the closer we are to February expiration, the more value that spread will have if we get to the 70 level. Now, that's one way we profit. We don't know how much we'll profit in that scenario, but it very likely will be a profitable trade if we trade up to 70 and we can close the whole spread down. That's one way we win. The other way we win, and this honestly is my preferred way to win, JC, is MPC kind of takes its sweet old time going in our direction. The earnings event comes and goes. Nothing takes us out of our trade, and it's still trending in our direction, but we don't quite get to 70 by February expiration. Well, great. Then those February short calls, those short February 70 calls will expire away worthless. We don't need to do anything. They'll just expire. They'll go away. And then we're left holding the long April 70 calls with theoretically unlimited upside from there. And if we make a run at that upper price target you have of around $88, those April 70 calls are going to see a great return. So I love, that's the scenario that I'm hoping for. Of course, if we trade to 70 a lot faster than that and we still have the short calls on, we'll take the trade off and book our win and not complain about it.
I like it, Sean. Originally we were talking and, volatility was low. Just buy the call options, call it a day, keep it simple, stupid. But I really am fascinated by that additional layer because of that earnings call at the beginning of February. I really think thinking through the reasoning of this strategy versus that one, to me, is always my favorite part.
Well, I'm glad I can entertain you, JC. I hope everyone else finds value in it as well.
Am I the only one here? Can I get a witness? I really do appreciate the thought process. You always have a good answer, and I just like picking your brain. I got another question for you. Big Buffalo game against the Falcons this weekend. Who do you think is going to win that?
Well, look, that's a loaded question. I think the Bills are going to win, but I'm a hardened skeptic when it comes to my Bills doing well. Everything, the whole table is set for them now. All they need to do is win out. They should be easy wins, but the Bills have a habit of taking the easy stuff and making it hard. So if we can get through this Falcons game this week, then I'll start getting excited. But hey, what I'm really rooting for, JC, is I'm hoping for Bills, Dolphins, AFC Championship game, you and me going to Buffalo, getting our game on. It's going to be great.
I was there. I think it was 92. Was it 92? I think it was 92. Dolphins, Buffalo, something like that. Dolphins got Tennessee. Tough game. Miami controls their own destiny, but their own destiny goes through Tennessee and then the Patriots. So,
Well, when Tennessee gets Derrick Henry back, that's the team I'm afraid of most in the AFC.
all right, you heard it here first. Dolphins, Buffalo Bills, AFC title game. I think the odds of that in Vegas are probably pretty slim. Probably getting pretty good numbers on something like that. You placing any bets? You gambled at all or no?
I don't gamble on sports. I'm the worst sports gambler. I always bet with my heart, and then it just hurts doubly when I get it wrong.
Totally. Stick to the options, right?
That's right.
All right, guys. Listen, I'm JC Peretz. This is Sean McLaughlin. Shoot us an email. Say what's up.